Hello and welcome to another update video about STX. It's one of the best performing coins this year, and therefore it's time for an update. Yeah, I think I've only covered it once or twice here on this channel in the videos, but we sometimes cover it in the live streams, you know, when there are several questions or people ask questions about certain charts, and there has been quite a bit of an interest in STX. Therefore, I thought it's time for an update. Let's take a look at what we're doing. The setup here that we had on the chart, I think in the last video or in the last live stream that we did, is still valid. I'm counting the move of the December low as a wave 1 here that peaked in March. Then, and that's my best reading at the moment, we came down in an A wave, we moved up in an overshooting B wave, and we're now coming down in a C wave. It doesn't really look great from the, from a proportional point of view. However, if we look at where that B wave topped, it's actually a perfect level. Oops, that was the wrong tool. It's a perfect level for such a B wave, yeah, because overshooting B waves in these flat patterns, a typical target is the 1.38 fib retracement. So that's basically the length. So basically the B wave is 1.38 times the length of the A wave. And you can see where it topped perfectly at that level. That's just a very common high B wave target. And that gives me confidence in this view. And also it's a pretty clear 3-wave structure to the upside. And now we're coming down in a C wave, which looks like an ending diagonal. We have entered the support zone now for this wave 2, because if the move up is a wave 1, the ABC pattern is forming a wave 2 correction. That wave 2 might end shortly. We're now in the trend reversal zone. Ideally, price does not break and sustain below 38 cents. It has now reached a 50% retracement. Next target, if we break below the 62.3 cent level, which is that 50% retracement level, if we break below that, next target would be the golden ratio, the 61.8 retracement, and after that, the 38 cent level at the 78.6 retracement. So 62.3 cents, 52.4, and 38.1 cents are the support areas here that are relevant for the wave 2. What we can do is look at the Fibonacci extensions, because this is the support zone. Any sustained drop below the 78.6 retracement will make this setup less likely. If we take the length of the wave A, go to the high of the B wave, then we can identify a common target for the C wave in such a flat pattern, and that would be the 1.618 extension. That is at 45 cents. So I'm going to add that here as an extension target to the chart. 45 cents. Yeah, it's certainly a level I would pay attention to. Not saying it will definitely get there, but it's certainly a level I would pay attention to. Well, and how would the C wave work out? So let's go to the 4-hour chart to identify how the C wave could be labeled. Because if it's an ending diagonal, again, we're dealing with the with corrective subwaves basically. So if we have that C wave, we're looking for a 5-wave move, and each of the waves within that corrective move is a corrective structure. So the B wave would be the top, and then we're looking at a 3-wave move down first, because it would be corrective. So we've got that here as a wave 1, then an ABC in a wave 2. Then all of this would be a wave 3, a nice A, B, C zigzag in a wave 3. Then we had here probably a wave 4. Just thinking, yeah, probably here. And this could now be a 5th wave. This could technically be over. As you can see, we have 3 waves down already. But it could easily also extend, of course. I'm just thinking, obviously thinking while labeling is always difficult. It might do obviously one more low, because the move up currently looks very, very corrective. Just thinking, is there another way of labeling it? I mean, this certainly looks like a healthy 4, okay? And then obviously now in the 5th, I mean, just thinking, is there another possibility? Surely, I mean, the wave 1 could also sit here. Then we would have the wave 2 here. That would possibly push the 3rd wave down here. Could now be in a 4th with a 5th to come. Again, that's the problem with these diagonal patterns. They include very unreliable subwave structures. This here certainly gives you a clearer A, B, C in 1. Gives you a nice wave 2. Gives you an A, B, C in wave 3. Yeah. A, B, C. Whereas actually we might get something like that. Yeah, because in the 3rd wave then, if we say, all right, A, B, C, this here would be an A wave, had a B wave, and the C wave had a 1, 2, 3, 4, and one more low to come. Yeah. 1, 2, 3. Yeah. Let me just think. Let me just rethink that. But that would make sense. Because if we move the wave 1 back to where I had it first, with the wave 2 here, the wave 3 here, the wave 4 here, then it wouldn't really give you in the wave 5 the clear 3-wave move, because this move up is currently just corrective. So I would say we have a good chance to get one more low here. Yeah. And then you get a 5-wave move down. So, and that rather would confirm the idea that this is a C wave in itself. But again, you know, this is sort of just labeling subwaves. In a diagonal, always a bit difficult. But yeah, here, this count would, for example, be very similar to the Matic count. Now, what you can never rule out is, so this is, I think, a likely one. Yeah, with one more low in the C wave, because it's also a very weak move up here. Then get a healthy 4 and a 5. This resembles very much the Matic count. If we don't get all 5 waves down, then this was a WXY structure. Be aware that these coins can always turn around after 3 waves down. It would then just be a WXY, which is a more complex corrective pattern, but we then don't need 5 waves down here. Crypto likes to do this stuff. So therefore, I often say more important than the lower degree wave count, because you can always be off with a wave due to the difference between ABC and WXY. More important than trying to be super accurate and academic with the subwave structures, it is more important, more practical, to understand in which price range can this C wave go. And we're there now. We're now in support. That's when we need to start watching for an impulsive reversal. And we have to focus on the downside anyway, because the trend is down. And the trend is down as long as we don't see an impulsive reversal, which means what we need to see to call for a bottom is we need to see a 5-wave move up and a 3-wave move down. What the information based on Elliott wave tells us is that we have entered a price range that is a support range. It is a price range where we could finish this wave 2. And also the next rally could be a 3rd wave, which would be very bullish. And this is now the time where we need to be watching. Yes, we could get 1 or 2 more lows, but it's not guaranteed. And we're now in a price zone, in a zone where price can turn around at any time. But at present, another low is likely. If we break above that last swing high at 82 cents, I think a low has been made. At least it would be a first indication by breaking resistance, okay? But eventually what we need to see is a 5-wave move up, can be on a small time frame, and then a 3-wave move down. That would then be another 1-2 setup with a 3rd wave rally to come. So that sort of stacks. So as long as we hold here above 38 cents, I see no trouble for STX. Besides that, I don't think there is much more to add. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.